Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 4th of May 2024, and we're publishing our Gold and Silver Weekly Update for the week ending the 3rd of May. Gold and silver continued their consolidation and fell back as we forecast. Is the consolidation now over, or do we still have more to come? Let's take a look. Now, before we look at the figures, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comment section below for those who have not as yet joined that channel. Now, let's look at metals and other data. Gold fell $35 last week, falling from $2,338 to $2,303. having hit a high of 2,367 and a low of 2,278, a fall of 1.5%. In our last update, we predicted that gold would trade between 2,275 and 2,360, which it did. Gold spread between high and low was $89. In sterling terms, it finished the week down £38 at £1,837, and in euros it was down €49 at €2,141. Silver fell 63 cents, falling from $27.21 to $26.58, having hit a high of $28.46 and a low of $26.05, a fall of 2.3%. Last weekend, we forecast silver would move between 26 to 28, pretty accurately, we thought, within 5 cents of our forecast. The difference between its high and low was $2.41, even higher than the previous week's $2. In sterling terms, silver closed at £21.19, that's down 66 pence, and in euros it was down €0.81 at 24.71 euros. Gold to silver ratio rose a little from 85.9 to 1 to 86.6 to 1. Bitcoin has had a little bit of a topsy-turvy week, but currently is standing at $63,260. That's up $250 on the week. Equities were higher across the board. Dow Jones up 436 points at 38,675. The S&P up 28 points at 5,127. And the Nasdaq Composite up 229 points at 16,156. FTSE 100 index up 74 at 8,213. And living in the UK, it's good to see that the FTSE 100 is now above 8,000. Oils were lower. Brent crude down $6.54 at $82.96. And WTI crude down $5.74 at $78.11. We said last week the difference between these two would contract a little, and so that has happened, albeit by just around 80 cents. The dollar index stands at 105.03. That's down 0.9 points, almost 1 full point on the week. Now, last weekend we highlighted that the PCE inflation data was disappointing. Well, this past week, so was the consumer confidence figures for April, because they fell from 103.1 to 97, which is a 21-month low, and based on worries about food and gas prices. The ADP employment report came in at 192,000 new jobs against expectations of 183,000, but the jobs report on Friday was somewhat softer and disappointing. The figures for April were 175,000, compared with March's 315,000 and against expectations of 240,000. This was the smallest rise since last September. Hourly wages rose a modest 0.2% in April, slowing the annual rate from 4.1 to 3.9%. And manufacturing and services PMIs were marginally less than expectations. Now, we said last weekend to watch for the FOMC's rhetoric on Wednesday, as we were confident rates would remain unchanged, which they have, with the Fed funds rate still remaining at 5.25 to 5.5%. The US Central Bank signaled it is still leaning towards eventual reductions in borrowing costs, but put a red flag on recent disappointing inflation readings and suggested a possible stall in the movement of rates. We believe, and really only have ever believed, that there will only be 2 rate cuts this year, as opposed to the anticipated 3. But the Fed will, admittedly, be under political pressure as the general election nears. In terms of US economic data, we have consumer credit figures for March on Tuesday, with most of the week, the remainder of the week, hearing from various Fed officials and presidents commenting on their view as to how the economy is faring. So analysts will pay attention to words this week as opposed to data. So what can we expect for gold and silver prices moving forward? Well, technical analysts believe that despite holding support around the 50% retracement level, gold faces more technical bearish signs, with a bear flag pattern indicating potential for lower levels ahead. The general consensus is that we could easily see gold oscillate between $2,200 and $2,400 over the coming weeks, depending whether one is bullish or bearish. Short term, we see little to bolster gold unless geopolitical issues arise or worsen. Next week, there is so little economic data coming out of the US, analysts will be focused on general news and political events, as well as the Fed funds officers' comments. Silver is undergoing a similar impact, with the lower end of the range now around $26, but we believe could go lower potentially, and the upper range around $28.50. We believe prices may drift a little this week, but like gold, analysts will focus on news and political events as there's so little economic data available. We are remaining what we would call cautiously and mildly bearish for this coming week. So we envisage gold will trade somewhere between $22.50 and $2,350, with $2,225 to $2,375 as outliers. If, of course, investors panic a little and sell because they believe there are better opportunities elsewhere, gold could touch $2,200, but we're not really expecting that this week. We predict silver will trade normally between 26 and 28, with $25.50 to $28.50 as outliers. But again, if there is a bit of a panic, silver could go closer to this $25.25 level. But we're holding out at $25.50 as being sufficient support. What do you think? Please do share your thoughts. Meanwhile, thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter and subscribe there if you haven't done so. And all that remains is for us to wish you a happy, safe, enjoyable weekend, and as always, a prosperous week ahead.